Selling your home is exciting, but it's also emotional. You've got offers coming in, you've got people walking through your house, you've got agents calling, you got deadlines to hit. And in the middle of all of that, it's really easy to say yes to something that feels harmless in the moment, but ends up costing you time, money, or worse, the deal itself. I've been doing this for a long time, what feels like forever, but it's been 20 years of selling homes right here in Southern California. And the biggest regrets I hear from sellers almost always come down to one thing. They agreed to something they shouldn't have. So in today's video, we're breaking down 15 things you should never agree to when selling your home. These are real scenarios I've seen go sideways, and knowing how to handle them up front, well, that's what separates a smooth sale from an absolute disaster. Now, you might want to take a few notes because this list will help you protect your money, your time, and your sanity. And if you find this helpful at all, do me a favor, hit that like button, subscribe, and let's get right into it. The very first thing I want to talk about is unscheduled or walk-up showings. Never ever let someone just stop by and ask to see your home. It happens more than you think. Your realtor sticks a sign in the yard and 10 minutes later, someone's knocking saying they're really interested in seeing your home. Now, I get the temptation. The market's slow, you're excited, you think maybe this is the buyer. But here's the reality. You don't know who they are, if they're qualified or if they're even serious. Maybe they're just curious, or in some cases, maybe they're casing the house. Either way, it's not worth it. And here's what I tell sellers all the time. If a buyer is legitimate, they're going to call the number on the sign or the MLS and they're going to schedule a showing through their agent. So in this case, protect yourself, your privacy, and your belongings. A simple, we're happy to schedule a showing through our agent is all you need. In fact, just point them directly to the sign in the front yard. Now, the next one is not something I see very often, but it's something I've heard of recently, and it's something you should absolutely stay away from. And that's letting buyers park in your garage or see if their car will fit. Now, I know in some cases this sounds harmless. Can I just pull my truck in to make sure it fits? But here's the thing. Please don't do it, because one scratch, one dent, one broken storage bin, and now you've got an awkward argument on your hands. You can't prove who caused it, and you're left paying for the repairs. So here's the thing. What I would do is give them a tape measurement or let them bring their own tape measure. But what you should never do is give them the keys to your garage or to a potential insurance claim. Now, the next one is something that's a pet peeve of mine, and that's that you should never allow pets at your showings. Here's the thing. I love dogs, cats, all of it. But there's a time and a place. Showings are not one of them. Now, here's the thing. I see it all the time because buyers are like, this is part of my family, and they want to bring their pet in just to see if they like the house. But here's the thing. Animals get anxious in new environments. In some cases, they scratch the floors, they start shedding, or worse, they have accidents on the carpet. I once had a listing where the buyer brought in their dog that had an accident right in the middle of the living room. So when someone says, can I bring my pet? The answer is simple. Not today. Now, the next one sounds harmless, but it's something that I want you to stay away from entirely, and that's any sort of buyer work before closing. And that's because this one can sound perfectly reasonable. A buyer wants to fumigate before closing or start painting so that they can move right in. But until escrow closes, that home is still yours. And if something goes wrong, like a leak, a fire, an injury, it becomes your problem, not theirs. Now, I've personally never had any issues like this. I know several agents that have had multiple problems right before closing where the deal fell apart, the buyer had done work, and now you're just kind of in this awkward stage. One of them was a fumigation company left a hose running under a tented home. The house flooded, the floors were ruined, and the entire deal fell apart right at closing. And in that case, the buyer was upset, the seller was furious, and everyone ended up losing. So do me a favor and remember, no work, no painting, no fumigation, no repairs before escrow closes. If it's not their home yet, they don't touch it. Now, in the case that you're the one doing the repairs, you've agreed to do certain things prior to closing, then that's completely okay because that's on you to get those things done. What we're talking about here is letting the buyer in to do repairs or modifications on your home. Many times the buyers want to paint, they want to change the flooring, they want to do different upgrades here and there, and they want to move right in. They don't want to have to deal with it when they're closing. And maybe you've already moved out of your property, so your property's vacant and you think, no harm, no foul. They can just go right in, do their thing, and when the property closes, they can move in. Well, that's exactly what I want you to stay away from because again, the risk is much greater than the reward. Now, number 5 is probably the most common thing on this list, and it's something that as a seller, you have to stay away from. In fact, I've done an entire video on it, and that is early move-ins. And this one's tough because it sounds harmless. You know, in some cases, maybe the buyers are relocating from another state. They sold their house early. They've got a truck full of furniture, and now they got nowhere to go. They just need a week or a couple of days to get their funding done And maybe in some cases it was no fault of their own. Maybe the lender dropped the ball or their agent on the other side dropped the ball. And a lot of times the argument is, hey, like we're trying to avoid moving twice, so can't we just move into the property? But here's the problem. Without some sort of rental agreement, if they move in before closing, they've essentially taken possession. That means liability shifts to you for everything that happens on that property. In the case that they damage something, injure themselves, or maybe in the case that they decide they don't like it, well, in those cases, you're stuck. Remember, nothing is done until that property records with the county and the money is in your hands. I've seen several deals fall apart at the last minute in my career after loan docs have been signed, to the point where you're waiting for it to record. And had you let those buyers move in early, then now you're in a position where you're trying to get your home back on the market. You're trying to get those buyers out of the property. So trust me, it's in your best interest not to allow it. Now, number 6 is going to sound very self-serving, and that's hiring an inexperienced friend or relative to help you sell your home. Now, I realize this is emotional, right? Selling a home is an emotional process. And maybe your niece just got her license and she's eager to help. And you think, what's the harm? It's just one transaction. But here's the reality. This is likely your biggest financial asset, and an unexperienced agent can cost you tens of thousands of dollars, or worse, lose you a qualified buyer altogether. I've seen out-of-area relatives list homes with no signage, no marketing, and absolutely no local knowledge. In fact, I see agents list homes all of the time here in Orange County when their primary market is up in the valley, which is 2, 3, 4 hours away depending on traffic. And guess how that goes? I mean, here's the thing. You wouldn't hand a scalpel to someone who just watched a YouTube video on surgery, so don't hand your biggest investment to someone who's still learning the ropes. In fact, if you're looking for an experienced, vetted agent that does business just like I do, I've been doing this over 20 years and I network with agents all over the country. And with that, I've created a list of agents that work just like I do, and I'm happy to make the referral so that I know you're in good hands. If you're curious or interested or want somebody to help guide you through that process, do me a favor and check that link in the description. Now, the 7th thing I want you to never agree to, and that's negotiating personal property. Remember, you're selling your home, not your furniture. Once you start mixing in personal property like the dining set, the TV, the patio heater, it complicates the deal. And even worse, lenders hate it. Underwriters might flag it, and suddenly your clean sale turns a little bit messy. If a buyer wants to buy something in your home, that's awesome. But here's the thing. Handle it separately after contingencies are removed, but do it during the escrow period. Just keep it really, really simple. Now, number 8 is pretty common sense, but I have seen it happen. And that's where I want you to stay away from lowball offers from, say, unlicensed or unreachable buyers. Now, oftentimes when I list a property, I'll get a random email from some random investor with some lowball offer. Now, most of the time I present it to my client. My client's like, I have no interest in that at all. We're not even responding. And that's because a lot of investors go out and find these agents that will just write deals on their behalf, and they don't really need a lot of experience. In fact, some of them aren't even licensed. They're just out there trying to find a deal. And that's why I want you to stay away from it, because if you can't verify who they are, you need to delete it. Real buyers, they go through the pre-approval process, they have real agents, they have working phone numbers, they're usually in contact about offers being submitted. The offers that I'm talking about just randomly show up in your email, and more often than not, there's no one ever following up on it. Now, this is a little bit different from you getting a lowball offer from a qualified buyer, because sometimes that's a starting point. Sometimes those buyers are willing to negotiate. I can't tell you how often I see buyers write lowball offers, and then after talking to their agent says, hey, listen, just send us a counteroffer. Then we send a counteroffer closer to where we were originally listed. And many times those buyers end up coming really, really close to where we originally started. But with that said, if it's a lowball offer, it seems too good to be true in some cases, or something just seems off and nobody's answering calls, nobody's returning emails, chances are it's exactly what you thought it was, and you should probably walk away. Now, number 9 is something that doesn't typically happen, but in some cases, buyers do request longer escrows. And the longer the escrow, and the greater the risk of that deal falling apart. And that's because things change, jobs, credit scores, interest rates, motivation, sometimes government shutdowns. Every extra week opens the door for a deal to fall apart. While there's no standard escrow timeline, what I would say is 30 to 45 days is pretty typical, and that's an escrow that keeps momentum strong. Anything beyond that, make sure there's a very good reason behind it. I'm actually in the process of selling a property right now here in Orange County where it's a VA loan assumption. There's a VA loan on that property, and the buyer that's buying that property is assuming the VA loan. Now, we started the escrow as a 30-day escrow, knowing that it was probably going going to take a little bit longer in order to sell that home. Well, at the time we're filming this video, we're probably in 45, 50 days in this process, and that's because we're waiting on the loan servicer to approve the buyer so that they can actually assume that loan. So in that case, we have a good reason, and my seller knew that going into the process. But in the case that a deal's just dragging on and you don't have good communication on the other side, you should probably cut ties, or better yet, never agree to it to start with. And that's because, remember, time kills deals. Now, number 10 kind of goes back to something we discussed a little bit earlier, and that's remodel or update request while you're under contract. So you're in escrow, the buyer's happy, and then they start asking for upgrades. Things like, can you paint the bedrooms? Can you change the countertops? Can you paint the front door? And in most cases, the answer is very, very simple. No, they've made their offer based on what they saw. If they want to personalize, then that's their project. But at the same time, if they've done an inspection on the property and there are things that show up in that inspection that need to be completed, health and safety items, or things that you think you would want as a buyer and you agree to them, then that's a completely different story. Like if you have an inspection and it reveals, a real issue like a leak, mold, or some sort of safety problem, then you're going to handle that. But you're not going to flip the home in order to make the buyer happy. You're not going to change the floor plan because the buyer gets under contract and decides, well, I didn't really like that and I want it changed. That's on the buyer. That's their problem. In fact, you should do all of your prep before listing that home. You're going to handle the repairs that matter, and you're going to keep your boundaries firm once escrow starts. I tell my clients all the time, you should have your line in the sand when it comes to price, when it comes to negotiation, and if the buyers aren't willing to agree to that, then in most cases, you need to be willing to walk. Now, the next one is another pet peeve of mine. Yes, I have a lot of pet peeves. At least that's what my wife says. And this one is accepting an offer without a pre-approval, or in some cases, proof of funds. If they don't have their pre-approval letter or their proof of funds, then in my opinion, those buyers are not ready to purchase a home. You shouldn't waste a single day of market time entertaining someone who cannot prove they can close on the property. Now, in some cases, they might say, well, I'm getting the money from a family member, or I'm getting the money from another property, I'm refinancing, I'm pulling cash out. Well, if they can't prove that money's liquid, then you should probably hesitate to some degree and wait until they have that money in their account before you move forward. Now, in the case of a gift, get a gift letter from the parent, the family member, whoever it is, and maybe proof of where that money's coming from, just like a lender would require. And that's so that you don't waste any time. This isn't a personal thing, it's practical. And a solid buyer should want to show you that they're actually qualified. I tell people all the time, you shouldn't be out looking for homes unless you're pre-approved. And that's because sellers aren't going to take you seriously if you can't prove that you've been through that pre-approval process. If you're writing an offer on a property and you haven't done the due diligence, the legwork to know that you're actually qualified, then you shouldn't be out there shopping for a home. And the same thing goes for you as a seller. You or your agent should be verifying that the buyers that are writing offers on your home are qualified. They should have the pre-approval letter. They should have the proof of funds. And in fact, your agent should probably be calling that lender and or that agent on the other side to walk through their pre-approval just to make sure they're good to go. Now, the 12th thing is unrealistic or long contingencies. Now, here's the thing. Contingencies exist to protect both sides, but they have to be realistic. If a buyer's home isn't even listed, then you shouldn't be accepting an offer contingent on that sale. You'll be sitting in limbo while they get their act together. I've said this many, many times in videos over the years. If you're looking to buy another home and you need to sell your home needs to be on the market. In best case, that home is under contract. Now, in the case that it's not under contract, at least it's listed so that if a seller is looking at your offer, they know that you're realistic in the process. As a seller, you should never accept an offer where a buyer's contingent, where they haven't even put their home on the market yet. And that's because you don't know how long it's going to take for them to put their home under contract. You don't even know if it's going to go under contract. And by agreeing to accept their offer contingent on that, you're essentially tying yourself up where you can't accept another offer. And the same can be said for buyers asking for longer contingency periods. Here in the state of California, the standard contingency period in the residential purchase agreement is 17 days. That means you have 17 days to do all of the due diligence on that property to confirm that you're moving forward on that home. But as someone who lists a lot of properties and works with a lot of sellers, I'm typically recommending to sellers that we try to get the buyer to agree to 12 days or even 10 days because we want to firm up that contract as quick as we can, because oftentimes You, as a seller, are buying another property, or in some cases, maybe you're moving out of state, and we need to know if that deal's actually going to move forward. So the shorter we have on that contingency period, the better off you're going to be long term. And that's because if a buyer has a 21-day inspection period or a 30-day loan contingency period, that's not due diligence, that's delay, and they're just tying up the property. You need something closer to 7 to 10 to 12 days for inspections, 10 to maybe 14 for the loan appraisal. Ideally, I'm trying to get everything done in 10, but the reality is anything longer, we're essentially countering that down. And that's because momentum matters. When a deal drags, the buyer's enthusiasm fades. In some cases, things can go wrong like we discussed, and that's when deals can fall apart. Now, the next thing you should never agree to is agreeing to contract terms without some sort of set deadline. And I realize this one's technical, but it's important. If the contract says that you're agreeing to cover certain items in the contract, some cases maybe the termite clearance or certain repairs, sewer line, some sort of retrofit work, there should always be a dollar limit attached to that. And that's because without a cap, you're essentially signing a blank check. I've seen sellers hit with massive repair bills because the contract stated that the seller was to rectify the issue but didn't state the limit. In fact, one of the properties where my buyers purchased, there ended up being a mold problem in the property. And we negotiated through the contract that the seller would be responsible for remediating that mold and fixing everything that was associated with it prior to my buyer buying that property. Well, those repairs ended up being like $70,000, $80,000 at the end of the day. And in that case, it ended up benefiting my buyers, and the sellers probably would have had to do it either way, but they agreed to it without ever knowing the dollar amount. So what I want you to do is protect yourself. It should read something like seller responsible for up to, say, $10,000 or whatever amount you're comfortable with. Anything above that, the buyer will cover it. And the last thing I want you to stay away from is unresponsive buyers. I want you to trust your gut. If a buyer drags their feet on the initial paperwork, they go dark between messages, or it takes forever to respond to, say, a counteroffer, to me, as an agent, that's a red flag. As we've stated several times in this video, buying a home requires momentum. If they're slow now, guess what? They're going to be slow when the escrow process starts, because buyers are typically the most excited when they're trying to get under contract and when they initially get under contract. So if people are already dragging their feet up front, then in my opinion, they're telling you exactly who they are. When I represent a seller, we typically counter all of the offers, even the good ones, because we want to see how buyers respond. If they push back quickly and clearly, then that's a good sign. If they hesitate or ghost, then that tells me everything that we need to know. A strong deal not only requires two professional agents, but it also requires two motivated parties. So don't mistake hesitation for negotiation. And as I always say, you got to control the controllables, controlling the process, the emotions, the outcome. Saying no doesn't make you difficult. It makes you disciplined. And these 15 things are your guardrails. They keep you from making emotional decisions that could cost you big later. Now, if you're selling a home anywhere in the United States and you need an agent, make sure you reach out. I'm happy to refer you to somebody that does business just like me. My goal with this channel is to help you price your home right, prep smart, and maximize your equity. If you found any value today, make sure you hit that thumbs up, consider subscribing to the channel, and most of all, thanks for watching. See you on the next one.